Hey, welcome back to another episode of Johnscryptotherapy. Today we're going to look at the weekly chart. Really excited to analyze this chart, give you guys a perception on where price is going to go, and this is going to propel your small trades to a direction from the higher time frame. So let's say if our bias was bearish, what I'm going to be doing is going to a lower time frame. So lower time frame can be the 4 hour, can be the 1 hour. Guys, use this to get into your trades on a lower scale to project price towards the downside. This is the perception that I'm going to be giving you guys. Really excited to show you guys exactly everything that's going to be on this chart. So please, if you guys do like these type of videos, please make sure to like, share, and subscribe. So let's get right into it. First thing I'm going to be using is volume. Volume is king, volume is key. So here we're just going to use the basic volume indicator right here on the bottom, guys. And finally, we're also going to be using the cumulative delta volume index, or the indicator. This is telling us absorption. Why do I use this? Take a look at what I'm trying to show you guys, what absorption is. Okay, so let's break it down. Let's go from the weekly, then we'll go to lower time frame. I'm going to be setting up a short setup, a short selling trade opportunity right here. First of all, I'm looking at the directional bias of the trend. Clearly, we could see from the left to the right. What do we notice, guys? The price is going down. That means our bias is already structured into our play to be a selling contract or selling setup towards the downside. The other thing that I want to look at, are we seeing any key levels of rejection? Right here, guys, FVG, fair value gaps. Fair value gaps are great to identify reversals where price is stuck. And you can clearly see, guys, we have 3 times of a key level of rejection and price is failing. Price is failing to go a little bit higher. That means, what is the probability? History repeats itself. So if history repeats itself, I want to use this as key indication that maybe price can continue a little bit lower. So the second thing that I want to be looking at is volume. Do I have key volume going towards the upside? Well, guys, you can see clearly we have key levels of volume going towards the upside. If we have volume and we're coming to a key level, if the volume was true and we had a lot of buyers, can't you guys imagine the price should be a little bit higher, breaking up to new levels, new heights? Yes, it should be, because the volume dictates we should have gone a little bit higher. That if we do have volume at a key level and we're stalling and price is slowing down, that's an indication for you guys to realize, hey, maybe the sellers are getting stronger. So selling setup, sell. So we need to have that in the back of our mind. Directional bias is towards the downside. We have a fair value gap towards the downside, and we also have a selling indication on the volume index or the volume indicator. Second thing that I want you guys to look at is very obvious. It's called absorption. I want to put a vertical line exactly at this moment and where price is at this moment. When you look at this, what is price showing us here? Well, it looks pretty equal, right? To the blind eye, it is absolutely equal. But to the person that's watching this and is credible and understanding these trading mechanisms for you to enter the trades the right way, we notice that we have a key level of absorption. Why is this important? Well, take a look, guys. If we have volume and we have a lot of buyers and the contracts are buying, but the price is stalling, cha-ching, that's a sign that price will slowly reverse. That is a key idea to start looking for selling opportunities. If you guys are into the Fibonacci retracements, you could put your fibs right here all the way towards the bottom. You could see for yourself, we have hit the golden spot of 50 and 61.8. This is the golden nugget, the golden goose of trading. We like this. When it hits this, it's like butter. It's like a hot knife on butter. Why? Because this is like that key element where price will just smash it through, and this will give us that reversal that we're looking for. Putting it all together, we have a key idea that price wants to go lower. We have a fair value gap right here, guys, that you can see price is attracted to. When you look at this volume idea as well, guys, so this right here is my fixed volume profile. Inside of it, we have a ratio of 68%. 68% means that volume is attracted to go inside of this because the majority of the volume throughout this session was played within this section. So let's say you have an iPhone, you bought it for $100. Guess what? If it goes to 1,000, it will come back down to 100. Or if it goes lower than 100, it's going to come back to 100. What does that basically mean? The meme, the norm, the idea that the price is stagnated. So the $100 is the minimum or the best offer you can get. So if you get below, you buy it to the 100. If it's too high, you sell it and bring it back to the 100, because 100 is that flat rate that throughout the year or throughout the months, the price is willing to trade in. So keep that in mind. The 68 is right here. This is where the price wants to trade in. When you look at this arrow or this red line right here, this is called POC, point of control, where the highest volume is situated. Now, this is very important for us to know. But before we do that, look at these little volume spikes right here. Are we in that volume cluster as well? Yes, you guys could see this wick is touching the fair value gap, the volume cluster, and also within Fibonacci retracements. This is a beautiful setup. These are the setups that I'm looking for every single day in the markets, where I can isolate the markets and take this beautiful short. The other thing that I want you to know, well, John, this is beautiful. This is perfect. Now, how do I know price is going to go down? Well, price is always looking for liquidations. It's looking to liquidate previous structures of stop losses. So let's go into a lower time frame, and I'm going to show you what I'm looking at right here. So once I drop to a lower time frame, let's say the 30-minute right here, guys, I'm going to show you. And this is the eye that I use when I'm looking at trading right here. Well, you can see this double bottom. What do you think double bottoms mean? A lot of stop losses are underneath. So that's a lot of liquidity that the price is holding. Again, guys, look at here. We have more money stuck underneath. So if this is true and the setup is perfectly right that I'm explaining to you guys, of course, there's a simple way of entering the trade. That's something that I teach with my footprint charts. But knowing this idea, there's such a high demand of probability. This is like an 80+ average trade, guys. If you take trades like this, you're guaranteed to be an 80+% trader. And this is what I personally look for. So once again, let's break it down. If this is the perception that we're getting and there's liquidation on the lower time frame, what do you expect that I'm looking to do with price? Of course, guys, I'm looking to sell the price. Where is the first obvious take profit? You guys know this, and I'm going to show you this just to show you that price is going to respect this. Can you guys see we have a fair value gap right here on the bottom, right here? So that means 100 guaranteed percent that I'm going to be doing. I'm going to be selling the market right here, looking for internal shorts. Where am I taking majority of my profits or my first take profit just before the fair value gap? This is a small setup, but what I'm expecting is when this fair value gets broken, I'm looking for internal structures to continue lower. Everything is set, guys, and now it's up for you guys to take advantage of what I put out. And hopefully you guys enjoy these type of videos. These are the videos that will make you a better trader, and I truly am grateful for this community and the great students I have all over the world that love what I do and enjoy all my teachings. Guys, I appreciate every single one of you guys, and this is just an update. Hopefully you guys enjoy it. Take the advantage, take the sell, but keep in mind, this is not financial advice. This is my advice, and keep this educational based only. Other than that, thank you so much. Take it easy, and John out. Peace.